Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Mathew. This show gets you answers to all of your personal finance related questions, and we often talk about investment related concepts. And today I'd like to talk to you about a category of actively managed equity mutual fund schemes that has grown quite considerably over the last 1 year. If I look at the assets under management in this particular category, as of the end of January last year, 2025, it stood at 2.61 lakh crore rupees. It has grown to 3.25 lakh crore rupees as of the end of January 2026, which is quite the substantial increase. And now most of that is not driven by an increase or a considerable increase in the market, because as you know, the equity markets have done precious little over the course of the last 12 months or so. So therefore, let's talk about why this large and mid-cap category, and I didn't mention the category earlier, is getting so much traction, whether you should consider this. It's viewed as a midpoint between large-cap funds and mid-cap funds. Joining me to talk about it is Harsh Kumar, the managing partner and co-founder at Zvest Financial Services. Harsh, thanks so much for taking the time. In my introduction, I spoke about the increase in the interest in this particular segment. Have you seen that as well, and why do you think that is?
Hi, Alex. Good afternoon. Thank you for having me. So, first of all, let me get into the genesis of this category. Now, this category was created so that a fund manager could give the experience of stability as well as the growth opportunity to an investor. This category was started in 2017 after recategorization by Security and Exchange Board of India. The benchmark, which is BSC Large Mid 250 and Nifty Large Mid 250, were created around the same time with the base year 2005. Now, as we speak, the number of funds in this category are 34, out of which around 13 funds got started after recategorization, which means in the last 7 to 8 years, and remaining funds were reclassification of the erstwhile fund. For example, the biggest fund in this category, Mire Large and Mid Cap, was Mire Emerging Blue Chip, and it was reclassified as Mire Large and Mid Cap. Now, coming to your point about flows, yes, you're right that in last 1 year, we have seen the flows in this category jump to around 25%, jump by around 25%. And we have seen the broader equity AUM growing by around 18%. But this is not just restricted to last 1 year. If I look at last 3 years data also, we saw equity AUM going up by around 130, 131%, while this category grew by 155%. So much so that now this category is the sixth leading category among equity funds. First being sectoral, followed by flexi cap, then large, mid, small, and then this category numbers come into picture. Now, coming to the point where you asked that what are the reasons why investors are coming to this category? So there are two main reasons. One, a lot of investors who used to earlier invest into pure large cap funds. Now, there the flows momentum seems to be reducing. For example, if this category saw flows of around 25%, in large cap we saw the flows ranging between 14 to 16% for last 3 years. So that large cap intended flow is now coming to the market through multi cap, flexi cap, and large and mid cap. Second reason, what we feel is that for last 18 to 24 months, the valuation in mid cap has been slightly elevated. So for an investor who wanted to participate in mid cap but was a little wary of the exposure in a high valuation segment, was taking exposure in mid cap through this category. And these are the two reasons why this category has seen significant inflows in last 2 to 3 years.
Very interesting. Let's also talk about, and you briefly alluded to why this is getting interest, but let's talk about how these portfolios are constructed. Like, for example, a large cap scheme would have a requirement to have at least 80% of the AUM invested in large cap. A mid cap scheme would have 65%. How does that work for a large and mid cap scheme?
So this is very interesting because here, like I mentioned, the objective of creating this category was that you should have the robustness of large cap as well as agility of mid cap. And that's the reason the ratio, which is minimum or percentage allocation, has been kept at 35% for both these category. But if I look at most of the funds in this category, most of them have been running around 40 to 50% in large cap, remaining in mid and small cap, where mid cap would have been around 35 to 40% and around 10% in small cap. So that's where it differentiates itself from both multi cap as well as flexi cap, because in flexi cap you have certain funds where large cap allocation is as high as 70-75%. And in multi-cap, you have small cap slightly at a higher allocation. So this is pure play large cap with some bit of small cap.
Got it. Okay, so that's interesting. So that's interesting, and that's how it works, right? So the question that a lot of people will be asking is, why should I go towards this? Should I? Traditionally, they've gone to large caps, and most people have gone through index funds, right? But quite a few people have also chosen to go through active. It is a pretty large category, and a lot of people have gravitated towards mid cap as well. Is this something that gives you the best of both worlds? Has the return profile shown you that?
Right. So, Alex, whenever we review any category, return is one part, and the
Yeah.
second part is the volatility or
Sure.
the risk. So,
Yeah.
let me compare both the parameters. So, first, let me come to stability of this category, which we can gauge from volatility. If I look at last 5 years volatility, for large cap, it's been around 13%. For mid cap, it's been around 15%. And large and mid cap category, coincidentally, has the midpoint of that, which is around 14%. So, which means it has been managing its volatility well. If I look at risk reward in this category, which we generally measure through Sharpe ratio, it's a bit technical, but it is the return generated per unit of risk taken by the fund manager. In this category, we see again the Sharpe ratio is higher than the midpoint of large and mid cap. Just to give you numbers, the Sharpe ratio for large cap has been around zero point 0.5. For mid cap, it's been 0.8. And for large and mid cap has been zero point 0.7, which means this category is generating higher return or much higher return than large cap on the risk it ends up taking. Third thing, if I look at the returns where you started the conversation, if I look at last 5 years trailing return, large cap would be at around an average of around 13%, mid cap would be at an average of around 16.5%, sorry, 18.5%, and large and mid cap would be at around 16.5%. Even if I take rolling 1 year return over last 5 years, large cap remains the same at 13%, while in case of mid cap and large and mid cap, the return would be down by around 1.5 to 2%. But you take any parameter, you take risk reward, you take volatility, you take return. We see time and again that in this category, return is higher than large cap, volatility is lower than mid cap. So, like you asked me, yes, it's right that it combines the best of both the worlds.
Interesting. What are some of the oldest schemes? And you've talked about the fact that this is not just a phenomenon over the last 1 year where these schemes have been getting traction, a pretty old category, right? And so therefore, what are some of the older schemes and how have they worked?
So, Alex, when we're looking at the return of this category, I will not venture into 10 years, 15 years return because this category was created around 8 years back.
Sure.
So let's look at the trailing return of last 7 years or 5 years or period less than that. So in last 7 years, we have seen ICICI, Bandhan and HDFC being the leading funds, and all of them would have generated return upward of 20%. If I look at last 5 years, we see ICICI and Bandhan being a part of that, while Motilal Oswal replaced HDFC. If I come to the data for last 3 years, ICICI moves out, Invesco moves in. If I look at last 1 year, then the pecking order has completely changed. We have Helios leading the chart, followed by Kotak, and lastly by Mirae. Now, if I see risk adjusted return, because that is what matters to a lot of investors, there are three funds which come into the picture is ICICI, followed by Bandhan, followed by SBI. Now, Motilal Oswal moves out because it's slightly higher volatile fund. But if I look at the oldest fund in this category, that is Mirae Large and Mid Cap, and like I mentioned that this fund was earlier emerging blue chip. But this fund has generated fantastic return of around 21% since inception. And in last 1 year, it has rebounded in terms of returns also. But if I look at the consistency over last 3, 5, 7 years period, then I think three funds which come into my mind. One is ICICI, second is Bandhan. And in third place, you can have Mirae, SBI or Motilal Oswal, depending on what volatility you want to take.
Got it. And you've already spoken about some of the performance, right? But I do want to ask you, Harsh, because you also look at fund managers very closely. So what stands out about some of these fund managers? For example, the Mirae fund manager, and you talked about how this is one of the oldest schemes in the category, and they've been pretty consistent. So what stands out about some of the strategies that they employ?
So, Alex, one of the most important thing in this category, where you have a blend of two different categories, you have to be very careful about manager selection. And why I say so, let's say you are a large cap fund manager, then the variables which impact the large cap universe are broadly similar. They are not same, but there is a high amount of correlation. But when I look at mid cap, the variables which play into a mid cap or a small cap categories are far higher than large cap. Plus, the coverage by sell side analyst is lower in comparison to large cap. So, which means manager selections become extremely important in this category. Now, coming to the name which you mentioned, this category is popularized by Mire because out of 3.25 lakh crore AUM, 42 to 43,000 is with the leading fund. And this is being managed by Nilesh Surana. He is the CIO of the fund house. He's been managing this fund since 2013. And his management style for in the recent past has been large cap at around 50%, mid cap at around 36 to 37%, and small cap at around 10 to 12%. If I look at the second fund, which I mentioned, which is Bandhan, that also is coincidentally co-managed rather, by Manish Gunwani. He's the CIO of Bandhan Mutual Fund, and he's taken slightly higher exposure in mid cap and small cap, where the ratio of large cap is 40%, mid and small cap is 60%. So is the case with ICICI, where again the ratio is split between 40 and 60, and ICICI is managed by Ihab Dilwai, and Ihab is also very well known for managing ICICI Balanced Advantage Fund. And in his portfolio, he has very beautifully blended growth as well as value style of investing. Lastly, it's Motilal Oswal, which has the highest allocation of mid and small cap in this space, which is at around 65%. And if you remember, I mentioned that the volatility of Motilal Oswal is on the higher side. Now you can connect the dots and make out that the reason for the volatility is because this fund has played significantly higher percentage of mid and small cap versus other funds where the ratio has been slightly lower as far as mid and small cap is concerned.
Understood. Okay, so you've laid that out very well. So therefore, to come to the crux of the matter, Harsh, which is ultimately when people are going towards large cap, they're either going active or passive. A lot of people do end up going towards active mid cap, even though there are now options available in the broader markets also to go towards passive. And there is this now large and mid cap, which, as you've so ably described, is giving you better returns than large cap and not as volatile as mid cap. There are options available. So what would need to garner your decision or help you make your decision on large and mid cap versus the other options that I've described?
So the first and the most important advantage is the asset allocation or the mix of large and mid cap. Now, this is a fund which is more like a cricket team where you have anchors in the form of opening batsmen, which are large cap, and then you have middle order, which is known for hitting scores and winning the matches. Now, if you have a portfolio which is pure play large cap, then you have anchors, but maybe you will miss the winning opportunity. And if you have only hitters, then you could have a situation where if they don't end up hitting, you could end up in a disastrous performance. So that's where large and mid cap has an advantage of mixing both the things. Here, you don't have to pay taxes when you move from large to mid or mid to large. Whereas if you are managing on your own, you end up paying taxes as in when you do the transaction. Third, like I mentioned, that many of these funds, since the fund management team is very, very critical, are co-managed by multiple fund managers. And that also helps because you end up having exposure to large and mid cap in a disciplined way through a professional approach. Let's say you are managing on your own and your ratio of mid cap goes to 60% and the valuation is high. You may have the inertia not to reduce the allocation from 60 to 50 if your profile asks you to do that. But in this case, the systems and processes are designed in such a way that it ends up balancing it. So these are the pros of this category. The negative of this category versus a pure play large cap or a active or a passive large cap is that the time horizon in this category needs to be a little higher because the volatility is high. This category would need some allocation through STP and SIP also, whereas in large cap, at times you can go lump sum or bulk also. Thirdly, this category may have higher drawdown also in comparison to, say, a large cap or active or passive. But one positive which I missed is that the coverage universe in this is higher. So you have around 250 stocks out of which fund managers can choose. While if you're taking a pure play mid cap, then the universe is restricted to 150 funds. If you're taking a pure play large cap, active or passive, the universe is limited to 100. So you have all these pros and cons basis which you should decide. However, one caution for DIY investors, I have interacted with some investors who invest into this fund assuming it to be a large cap plus fund in terms of returns without bothering about the volatility. And I must caution them that in this category, the range of volatility is very high. Like I mentioned at the beginning, for last 3-4 years, the volatility of Motilal Oswal has been higher than that of ICICI, and these things can change. So you should first decide which profile you should choose as far as fund selection is concerned, and then you should go for this and just don't blindly jump into this space.
Yeah, and that's the reason for this conversation, Harsh. And thanks so much for taking the time and for explaining it all to us. Pleasure speaking with you as always.
Thank you, Alex. Pleasure is mine.